So, diving right in, we're looking at this pretty bold comparison where the ex-SEC chief of staff compared liquid staking to Lehman Brothers practices in 2008.
Yeah, that's quite a striking analogy. What exactly did she say?
Well, Amanda Fisher essentially slammed the SEC's new guidance on liquid staking, arguing that um, it's like allowing a dangerous form of rehypothecation, similar to what led to the collapse of Lehman Brothers, but in crypto and without any significant oversight.
Right. That's heavy. So she's saying that the SEC is kind of giving crypto a free pass by not classifying some liquid staking operations as securities, right?
Exactly. And the crux is that this free pass, as she puts it, might exacerbate risk, sort of echoing the practices that fueled the financial crisis. It's a pretty provocative stance.
I see. And there was some back and forth on social media about this, wasn't there?
Yep, totally. Many in the crypto community saw the new guidance as a win for decentralized finance and institutional adoption. They felt that by not classifying liquid staking as a security, it actually opens up more innovative approaches without overregulation.
So on one side, you have Fisher warning about potential systemic risks, and on the other, advisors and experts praising a more open regulatory stance.
Right, and to add more detail, SEC Commissioner Hester Pierce backed the decision, stating that liquid staking is simply a smart solution to improve liquidity in a way that we've tried to solve for years. It's like improving the liquidity of a common asset, similar to enhancing market efficiency.
Yeah. Then there was Commissioner Caroline Crenshaw who criticized that same move, right?
Exactly. Crenshaw felt that the SEC's statement was based on shaky assumptions and that it didn't really give us clear regulatory guidelines. It's like they're leaving you with a lot of what ifs.
Right. It's interesting because Fisher's initial comment got a lot of pushback. I mean, isn't comparing crypto rehypothecation to Lehman Brothers a bit of an overreach?
I get that point, and honestly, some critics on X argued just that, saying her comment was technically or legally off. Jason Gottlieb, a New York based lawyer, mentioned that if blockchain based rehypothecation had existed in 2008, the crisis might not have unfolded the same way.
Mm-hmm. So it seems like Fisher is raising a red flag about potential risks, while others are challenging the comparison as lacking nuance.
Precisely, and that's where it gets really interesting. It forces us to consider how much oversight is needed in a decentralized space where innovation moves so fast, like faster than traditional finance can even
Yeah, indeed.
regulate.
And speaking of oversight, how do you see this impacting investor trust? I mean, if participants see liquid staking as risky, that could really shake things up, right?
Definitely. Investors have always been wary of opaque practices. Mert Mumtaz from Helios Labs compared the transparent nature of blockchain to the opaque ways of traditional banking. His perspective is that if you understand how LSTs work, then you can mitigate those risks. But if you don't, then the system feels dangerously unpredictable.
Yeah. And it looks like the numbers are showing a resurgence in liquid staking activities too, right? There's been a notable increase in total value locked.
Right. The TVL has shot up to about 66.94 billion year to date, even after a bit of a dip in April. That says there's robust market interest regardless of the regulatory chatter.
Mm-hmm. It's like a double-edged sword. On one hand, the market is embracing it. On the other, the regulatory uncertainty leaves room for systemic risk, which is exactly what Fisher warned against.
Exactly. And to add to that, the debate really boils down to an underlying question. When do we let innovation stand, and when do we safeguard the system? Liquid staking is framed as a tool for liquidity, but without oversight, it could enable risky financial
Right.
behaviors.
But isn't it a bit too strict to say that increased liquidity automatically translates into systemic risk? I mean, couldn't it be argued that a more liquid market actually helps prevent crises?
That's a fair point. But Fisher's critique is more about the rehypothecation element, using client assets as collateral repeatedly without clear safeguards. It's like a lever that, if misused, could spiral out of control.
Mm-hmm. I see what you mean. That rehypothecation practice did contribute to the turbulence in 2008 when oversight was minimal.
Exactly. It's like um, If you keep borrowing against the same pile of assets, eventually things get pretty wobbly. And the crypto world, given its rapid innovation rate, might just be replicating those vulnerabilities if we're not cautious.
Yeah, absolutely. So where do you stand on this? Is the risk overblown, or is there genuine merit to Fisher's concerns?
I sort of see both sides. On one hand, there's a huge potential for innovation and efficiency in decentralized finance. But on the other, as with any rapidly evolving field, the lack of clarity and oversight can invite risk, much like we saw with traditional finance back then. It's like appreciating the benefits, while, at the same time, keeping one eye on the potential for disaster.
Mm-hmm. That balanced perspective really captures it. It seems like a call for a more nuanced regulatory framework, one that protects investors without stifling innovation.
Precisely. And that debate is really at the heart of how the SEC and regulators worldwide will have to evolve if they want to keep pace with crypto innovations.
Right. It's a fascinating crossroads between legacy finance and a cutting edge decentralized future, isn't it?
Absolutely. It's like watching two worlds collide: traditional risk management tactics versus the new digital finance frontier. Both have valid points, but only time and smart regulation
Exactly.
will tell how the balance should be struck.
And hopefully without repeating past mistakes like the ones that led to Lehman Brothers' downfall.
Right, that's the hope. If we can learn from the past and implement the right checks and balances, then liquid staking can be as much a tool of growth as it is of caution.
Mm-hmm. So, to wrap up, it's clear that while liquid staking brings some innovative solutions to liquidity, its parallels to past financial calamities remind us of the importance of oversight and clear regulatory frameworks.
Exactly. And that dialogue between crypto enthusiasts, regulators, and legal experts is essential if we're going to navigate this complex territory without stepping into a repeat of history's missteps.
Right. This discussion definitely leaves a lot to think about. It's a reminder that innovation and caution need to go hand in hand.
Absolutely. And as this debate continues, we can only hope that the lessons from the past help shape a more robust future for crypto markets.
Yeah. Thanks for this insightful conversation. It really highlighted the nuances and silent tensions at play.
For sure, it's been great unpacking these issues with you today.